right. Welcome, everyone, to the Canadian Real Estate Channel. Hope you're having a good Wednesday. As always, Wednesday night, 8 p.m. Eastern Standard Time, we're doing our Real Estate Roundtable, where we just get together with other real estate professionals, investors, and talk about what's going on in the real estate market, particularly here in Canada. If you guys have any questions, feel free to jump in the chat. Again, we always love fielding your questions in the second half of the show, so we appreciate you guys making this a two-way conversation. But let's jump into it and start chatting with our first panelist. Hussein, how's it going?
Going great, Matt. Thanks for having me on the show.
Yeah, we're glad to have you. And so if you don't mind, just give a little bit of context for everyone on the channel. What's your background with real estate?
So I come from a family that's invested in real estate for a very, very long time. I'm a real estate lawyer practicing in Burlington, Ontario, servicing the Halton Hamilton region primarily. And honestly, my core clientele are real estate investors and helping them get set up on how to structure and be positioned for optimal growth in these challenging times.
Nice. And real estate investing and kind of dealing with those clients, is that a niche you sought out, or is that something that just kind of came together for you?
It honestly came together. My family's always been in real estate, so I was fascinated in myself. I knew I wanted to have a solicitor-based practice, which means doing a lot of paperwork, avoiding the courthouses, and real estate just became a natural fit between my own passion and servicing clients.
Awesome. Well, glad to have you. If anyone's got any questions, jump in the chat there for Hussein. Next, we've got Abdallah. Hey, Abdallah, how are you doing?
Matt, how are you?
Doing well. And so for anyone that's maybe not seen you on the channel before, do you want to just give a little bit of background with your relationship with real estate?
Yeah, absolutely, man. Yeah, nice to be back on screen here together, but happy to be on this roundtable. So I'm a real estate agent here in Hamilton, Ontario. I'm going into my 8th year in the industry. I've been investing in real estate since 2013, so about a couple of years and a bit before I got licensed. So I operate a boutique brokerage here in Hamilton as well, Rebel Hamilton Central, downtown Hamilton. So we have 21 licenses with us currently. So in our quick investment kind of breakdown, we started, with duplex purchases, single family conversions, and eventually worked our way up into, six plexes into the commercial residential side, and have our feet down in Florida doing some builds down there. So fortunate to have an eclectic background in the real estate field. So I run a sales team as well of 5 with the Madge Realty Group that I talk about all the time on the channel. But yeah, man, happy to be here and looking forward to chatting a little bit.
Awesome. Glad to have you. And if anyone's got any questions, I know it seems these days there's a lot of talk with real estate investors and wanting to look at investing outside of Canada. Florida always seems to be a very popular topic, so I wouldn't be surprised if we see that come up in the chat. All right. Next, we've got Kenny. Hey, Kenny, how are you doing?
Good evening, Matt. I'm doing well. Thank you for having me on the show.
Yeah, we're glad to have you. And so just give a little bit of background for anyone that's maybe unfamiliar with your relationship to real estate.
Sure. So I've been investing in the GTA market since 2014. Slowly, I started off with pre-construction condos and then eventually got into multifamily and really understood what investing was versus speculating. I used to work as an analyst for the big banks and the government. Did that for about 13 years. And then, just realized how soul crushing that corporate gig was, and eventually transitioned into being a full-time mortgage broker. And now because I have an investing background, I work as an investment specialist mortgage broker with the Finland team, and I've been with them for about 2 years, helping other investors grow their portfolio.
Awesome. Well, glad to have you. And so we've got all the bases covered tonight, guys. We've got a realtor, mortgage agent, as well as a lawyer. So definitely hit us up with any questions. But before we jump into any questions from the audience, I've got a couple articles and stories here I thought I'd explore with you guys. So the first one here, this is a tweet from Ben Rabideau. Canada's housing prices have now seen the largest cumulative decline from peak since the 1970s. And so again, it's just kind of highlighting some of the biggest down years in the Canadian real estate market. Previously, February 1989, March 2008, April 2017. And we can see February 2022 is, again, the largest cumulative decline from the peak since the 1970s. But I think also just to give a little bit more context here, here's an article from Better Dwelling. Canadian real estate now in the deepest correction since the 90s, prices back to the mid 2021. And so again, when you hear things like, the biggest correction in a single month since the 1970s, or, we're seeing the biggest correction since the 90s, that sounds pretty drastic. But there's something about when I actually look at this chart and think about 2021, it just doesn't seem actually all that long ago. And so it feels like this was a very rapid peak and very rapid decline. So I'd love to just explore with everyone on the call, what are your thoughts in regards to the Canadian real estate market? If you want to look into your crystal ball and give us predictions, people always love to hear predictions. But even more so, how are you seeing the average real estate investor reacting to the market conditions that we've got right now? Because for a lot of us real estate investors, the last 6, 7, 10 years look pretty linear, right? There was like any strategy kind of worked in that market. I think we're seeing much more dynamic market forces these days. Abdallah, do you mind maybe starting us off here? What's your thoughts? What are you seeing in your market, and how are you seeing real estate investors react?
Yeah, just naturally, I think I'll have to jump in here first to give just kind of what I see, boots on the ground, and dealing with investors at a high level for a long time. I mean, if I can quickly comment on those graphs, I mean, I'm sure most of the population knows that how quickly we skyrocketed, and the fall is still not where we were. Just even on the last episode of the channel that we did, comparing the end of 2019 to where we are today, we're still up huge, especially in the Hamilton and surrounding market. From my personal experience, in terms of how investors kind of viewed the violent changes in the market, there's definitely a lull, right? It was more of like a digestive period with people not knowing. It was just too much uncertainty, right? Like I couldn't, in good faith, advise somebody to move forward with an asset in the reposition of an asset if I couldn't clearly see what that exit looked like. Unless obviously it was just a smoking deal on the way in, and you just absolutely couldn't lose with, which still exists. So there was a bit of a lull, I would say. Like I felt it personally for maybe like 3 months, office as a whole, end of the summer into the fall. But I would say since November, December, I think there's been a lot more reinstated confidence. There's not many investors that I come across now where they even mention the interest rates in a discovery call. It's essentially the entries and the exits are a lot clearer. Obviously, those margins aren't as attractive as they used to be, but there's a lot of entry level, especially investors that are happy to jump into the Hamilton market right now, especially with where there's been huge zoning changes here in Hamilton and in terms of value add. So again, bit of a lull, but it's come back fierce. We're seeing competition again on the daily, especially with the dilapidated homes in Hamilton, which are famous to get a ton of offers on them. So it's almost you have a little bit of PTSD seeing the competition come back a little bit. But I think I wouldn't say it's consumer confidence is fully set back in, but it's come back with a vengeance. But I mean, those headlines, I kind of try to, when I'm articulating this to my agents and to investors that work with us, it's, you kind of have to read between the lines and see what they're comparing it to. For sure, yeah, we've seen an absolute free fall and from the peak of the pandemic market. That's no doubt, but we're still up huge from the end of 2019.
Mm-hmm. And so as far as like what properties over the last few months have you seen investors going after? Is there a certain type of strategy that seems more popular? Is it still in Hamilton, a lot of people chasing duplex conversions? Are they looking at like carriage lane or like third unit additions?
Yeah.
What sort of things are you seeing?
Yeah, exactly, Matt. So we're seeing a combination of a lot of different things. I'm trying to now, what we want to do is kind of position investors with okay, you're going in, you're doing your legal duplex conversion. You know, our construction company does them all the time, and you know, it's entry level, it's safe, but obviously cash flow is not nearly as attractive as it used to be. And now we're actually seeing, I talked about it in the last video, that rents have started to regress a little bit as well, right? But there's a combination of everything. What I'm really has, you know, kind of taken me back the last let's say 6 months is the shift into the commercial space, right? You know, the duplex conversion investors are wanting fourplex conversions. Those guys are wanting to get into the commercial world, right? A lot easier to deal with, you know, on the financing side. So you're still seeing a good combination, but everything that we used to do before in the entry level, we're always ensuring that there's some sort of value add, not in forced appreciation by way of renovation, but in adding additional units, especially now with you know, all the basics, the former basic zoning codes in Hamilton are allowing up to 4 units now. So if you have a 2.5-story home, a 4-level back split, detached garage, right now you're entering at a duplex price, obviously a lot more capital intensive, but now you're cashing out with, you know, with 4 sets of rent at its highest and best use.
Got it. Yeah, appreciate that context and insights to what you see going on in your market. Kenny, you know, are you seeing investors being impacted from like a appraisal standpoint in regards to mortgages and lining up financing? Are they seeming aggressive now with kind of going after properties, or do you see a lot of people waiting on the sidelines?
So definitely, I mean, I echo what Abdullah said, and I don't speak for the Hamilton market. I speak generally for, you know, the greater GTA and, you know, other parts of Ontario, and we even do some business outside of Ontario. So, but you know, keeping Ontario in mind, the demand had, you know, the consumer confidence had slowed down a little bit, and you know, for the months of October to December, it was definitely a slow period. But then we've seen activity pick up back again in January. January was one of our busier months, considering the last 3 to 4 months. So definitely, we're seeing a lot more demand. We're seeing investors coming back. We're seeing a lot of first-time home buyers are getting in the market again. I think the biggest push was for the last 3 months. I think because of the rapid rising interest rates, people just, you know, consumers didn't know where the rates were going to land and, you know, where the price is going to be. I think come January, you know, even before the 0.25% rate hike, I think people have come to terms with that. You know what, this 6.5% is here to stay for a bit. So the longer they wait, the more expensive it gets. So we've seen house prices rebounding in January again. We've seen some multiple offer situation. So I've actually had like 3 first-time home buyers purchase homes. You know, we did the mortgage back in January. So we're definitely seeing the consumer confidence coming back. In terms of appraisal, we did see, you know, there was a bigger hit back in October, November, December kind of timeframe, because the comparables were still from, you know, like the September and August timeframe, which were definitely higher, and then they were gradually on that decline. So when on the residential side, anyways, you know, when the appraisers are getting those comps, they're getting it from, you know, from the last 90 days, and of course the values were much higher. So people were having challenges getting that appraisal value. Come January, you know, we are, because the prices have sort of stabilized. I mean, you know, we've had that big dip, but you know, since December, January timeframe, in the last 60 to 70 days, the prices have kind of stabilized. And also, you know, the sellers know their properties are not worth as much what they were, you know, 6 months ago. So they're pricing it right. The realtors are, you know, the good realtors are getting those properties at a good price. So the end consumer is not having that much challenge appraising that property. Exceptions are always there, but at the same time, you know, the market is seeing signs of, you know, a bit more rationality than what it was 2 months ago. But it was just the state of the market was such, right? And on the commercial side, as Abdullah said, you know, a lot of investors are, of course, you know, they've been focusing on commercial real estate since last year, and that push has become bigger and bigger. You know, thanks to, you know, channels like Canadian REI, where, you know, of course we're showing, educating clients on the advantages of commercial real estate versus residential real estate. So on the mortgage end of things, a lot of clients want to get into commercial real estate. The inventory may be kind of scarce, but the need to get into commercial real estate is there, and people obviously see the benefits of buying that real estate at it may be underperforming today, and try to get into it through private capital or B capital, and then over time give it a year, stabilize that property, re-rent the units, repair the units, and then refinance that after a year. So definitely that push to get into commercial real estate is there.
Got it. Yeah, appreciate you sharing kind of what you're seeing boots on the ground these days when it comes to mortgages. Hussein, I'd love to hear kind of your thoughts and opinions and what your experiences are with the dramatic increase and then decrease in Canadian real estate prices. Has that like added friction to deals? Like, are you noticing, has it impacted like the closing rate of deals that pass by? Are buyers, trying to renegotiate at the last minute? What are you seeing?
So we're seeing a little bit of that, and it was more initially. Like, I find that when the rates started to go up, there was some resistance and friction we saw from our clients. But even that, I found it was more from like first-time home buyers or people changing their principal residence, where they might have had buyer's remorse, or just a lot of them that had appraisal issues that they just didn't have the money to come in because they couldn't get a mortgage to cover the difference. What I've really found is I found the investors who are disciplined, who have a strategy, and are able to cut out the noise. They're fine for the most part, because they know what they're doing. They have the team around them to give them the advice and support they need, and they're executing. Because throughout this time, as Abdallah alluded to and Kenny, the deals are still there to be had, because there are people, who are panicking and dumping assets that they shouldn't be, and that you can still treat well and also pivot. Like, what asset class are you actually investing in? Like, what are you actually trying to flip? What are you trying to develop? So it's all about the discipline that I've seen investors have. But for the most part, I find that my clients have been pretty fortunate. And the funny thing I've seen is sometimes just lawyers whose volumes may be down, they create conflict in deals just to basically compensate. So I find that sometimes there's just been a lack of collegiality and just common sense. And because we're all here to try and get deals done, and that should be the motivation, right? And sometimes I feel that some parties have just used this as an opportunity to be obstacles instead of solutions.
Yeah, appreciate that insight. And I definitely agree with you there. I think during kind of like periods of uncertainty or when the market's shifting, a lot of like maybe less scrupulous actors will use it to like test boundaries, or just kind of like, well, I was just going to see if I could get away with it, right? Would you be willing to drop the price a bit just to make a smooth closing, or are you going to put up a stink or things like that? Before we move on, I'd just love to hear, these days, what's kind of the biggest cause of friction to a closing that you seem to come across? Are you noticing any patterns?
So the one that has already been alluded to a little bit is the appraisals, and if the appraisal doesn't come in, how to get that done. And then the second one is people nitpick on like appliances or paint, or when there's a bit of buyer's remorse, they pick on everything. And then like the agents involved, the lawyers involved, and I'm just like, this is so cost ineffective. And honestly, for me, and I don't know, Abdullah feels like if I would tell his clients that, but like for me, I tell clients when they're coming in, they're buying a home, I'm saying budget $1,000 for patch ups and things like that. If what you see that you have a problem with can be fixed for less than $1,000, just accept it as a cost of buying a used residential home. Just if you go in with that mentality and you don't have to spend that money, think of it as like bonus money in your pocket. That way you will go in and you'll have a more positive experience. It's supposed to be an exciting time, a new purchase. Enjoy it. So set yourself up where you can manage your expectations.
Yeah, that's great advice. Abdallah?
Yeah, just echoing Hussein, a great way of explaining things. Yeah, it just comes down to, we went through a long period of time there, as the rates were continuously rising. And again, it just like the other gentleman said, right, remorse and all this that's setting in, right? And you have people walking in and like, what did I just do, right? It all comes down to these initial conversations, right? And like I mentioned before, if you're not able to give them a clear exit on their investment, whatever, so be it investment or an end user, then usually there's going to be, kind of some sort of pushback, right? But no, it's funny Hussein mentioning that you are seeing a lot more of, hey, you left some debris behind, or this is chipped, or something's not working. Like, yeah, appliances and whatnot, right? Like the big ticket items, you have a leg to stand on. But from a realtor perspective, there definitely was seeing a lot more of that kind of nitpicking and all these holdbacks that sincerely would never make sense on any planet. But I think that we're slowly kind of working back to a more normal state of just getting things closed and everything. Everybody's a little less stressed. So
nice. Yeah, that's good to hear. It came up a few times, so I'm going to pull up this tweet from Ron Butler here talking about interest rates. Will there be another Bank of Canada rate increase this year? If so, when? Everyone relax. Zero chance of any increase on March 8th. A 1% or 2% chance of an increase in April 12th. 98% chance, zero increase in April. But what then? The June and July dates get more interesting. If jobs reports stay strong and if Canada CPI nudges up even a very tiny amount for two reports, the Bank of Governor Tiff will feel the heat to bump another 25 basis points, particularly if the U.S. Fed continues steady 25 basis points increases. What if we hit another 25 prime increase? It could happen this summer. We may see a 25 increase. What will that mean? Firstly, pure pain for variable rate mortgages and HELOC holders. They thought they were out of the woods, and bang, another increase. They will be upset, very disappointed, and downhearted. What about fixed mortgage rates? If a 25 basis points increase becomes a certainty this summer, fixed rates stay higher longer, and that's bad news for all mortgage holders, because it means that the point a mortgage rate may start with a 3 in front of it is further and further away. So key takeaway, do not consider a variable rate mortgage. Just don't. If you read anything that variable rate be a good bet now, just delete that post. To even consider variable, it must be 1% or less than the fixed rates. No variable, don't even think about it. So Ron's been very outspoken over the last few months about variable interest rates and his belief that, your average investor or home buyer in Canada would not be well served to use that. So love to use this as an opportunity. First, what's everyone's hot take on variable versus fixed in this current environment? And secondly, again, obviously none of us can actually predict the future, but love to hear your thoughts and general opinions on where interest rates are headed for the rest of the year. If you don't mind, Kenny, maybe we'll start off with you.
Sure, Matt. So, I mean, I of course, I follow Ron Butler on Twitter, and of course, his tweets are, I see Ron as like, someone from my father's generation, and he's very conservative with his approach, and he's been a mortgage broker for, I think 50 plus years.
Yeah, I was going to say probably longer than you've been alive. Yeah.
So I'm sure he's seen, a lot more cycles than we have. And of course, he speaks from a lot of experience. But at the same time, that there is some value in what he puts out. Where the rates are going, again, really nobody has any idea. There's so many different factors that affect, the variable rates and the fixed rates. It's not just inflation. I mean, inflation being a top factor, but at the same time, there's all these other global factors that influence where the rates are going to be. But at the same time, in terms of variable versus fixed, for the longest time we've been advising on getting the variable rates because over the course of your term or your amortized period, variables tend to do better. In this current rate environment, because fixed rates, one we're on like the peak of the interest rate cycle, as I like to think. Hopefully we're not going much higher, but we're at the peak or close to the peak. Fixed rates are substantially lower than the variable rates, and with the uncertainty of the variable rates, we are at a 6.7 prime right now, and there are speculations that it may go up in March or April. So people that don't like that uncertainty, I definitely advise them not to go variable. But generally, so I think my general advice to my clients have been, get a 2-year fixed rate. The rates, don't get a 5-year fix because we are on the top of the cycle of the fixed rates as well. So don't lock yourself into a 5-year fix, but get a 2-year fix. The better part of analysts are predicting the rates to go down in the second half of 2024. So get a 2-year fix right now. The debt servicing in terms of qualification is also better because, when we're using that lower rate, we're also qualifying you at a lower rate. That gives you a lot more buying power. See how that goes for 2 years and then reassess depending on where the market is. Variable is definitely higher. So a lot of first-time home buyers, a lot of investors are having challenges, if we go the variable route. So a 2-year fixed is something that we're recommending to a lot of our clients.
Got it. Yeah, appreciate that insight. How about it, Hussein or Abdallah? Do you guys want to wade into interest rates? Yeah, Hussein.
Sure. I mean, personally, I do think the interest rates will go up by about a half percentage point for the rest of 2023. I don't see them coming down for the rest of this year because I think there's still a lot of money coming into the Canadian economy, and the jobs report also keeps blowing people out of any of the analysts. I'm surprised how they have jobs because each time they're nowhere near what the reality is. So I'm honestly expecting at least half, because with immigration coming in and the dollars flowing in with the immigration, it's going to keep inflation at pretty high rates. And the inflation report again was pretty high. So I'm surprised Ron's so convinced there isn't going to be a raise in March and April, and we'll see. I don't personally share his viewpoint.
Got it. Yeah, appreciate you sharing, Abdallah.
Sorry, guys, can you hear me?
Yep.
Yeah, awesome. Yeah, I guess I get this question a lot. I'm not a mortgage broker by any stretch. I'm just kind of cautiously optimistic here. I know I hear a bunch of different reports. Like talking to brokers near the end of last year that Q3 of this year you'll start to see some regression, and then you get excited because fixed rates are coming down, but obviously now employment's up. And I just honestly, I don't like to echo what Hussein said about these analysts. I don't know who to believe anymore. I just kind of, I'm a fairly proactive guy. I'm as reactive as can be when it comes to these interest rates, right? It's all about kind of just absorbing it and trying to give out the best advice you can with analyzing a deal. To build on what Kenny said, right? And these kind of short-term fixed loans are going to be the solution for a lot of people, right? I just, was fortunate to firm up a deal this evening, and it was the same concept. They went into a 3-year fixed, and it's kind of you're hopeful that things will be regulated by then, right? But it's anybody's guess. But from a realtor's perspective, I try to, I leverage all different aspects, right? Inspections. I mean, I can talk about houses. I like my clients to hear from the expert, but I hope Ron's right. So, but yeah, it's just about kind of absorbing it and making sure that we're not giving advice that we're not qualified to make, essentially.
Yeah, that's great advice as well, and appreciate everyone sharing their thoughts and insights on that. My general opinion is, yeah, I think it's very difficult to predict interest rates in even like more normalized markets versus like kind of the dynamicness that we seem to be experiencing now. I think for your average real estate investor, you're not in the business on making money or making a spread off of interest rates or speculating on interest rates. So I definitely would recommend the average investor seriously considered fixed rates. I think that it's much nicer just to know exactly what are your fixed payments, what amount of principal are you paying down over the period of time, and you can kind of set it and forget it and focus on the other levers on your real estate investing business to, like I'd rather focus on getting more deals or, taking the properties that I'm acquiring and bringing them up to their fairest best use versus trying to like squeeze out every single penny by speculating on interest rates and trying to predict whether the market's going to go up or down. If I had to guess, I wouldn't be surprised to find out that we're roughly where we started the year at the end of the year with interest rates. And I could see us drifting up another raise or two, but I could see them then quickly trying to like reduce the raise that they gave us this year to be like, see, rates are going to come down. I think inflation will likely be a lot stickier than most people are comfortable with, and it'll be an interesting trade-off that those in charge will have to make. But anyways, that's enough about interest rates, at least for now. We did get a couple questions come into the chat, so let's hit on those. And if you guys are watching this right now, hit us up in the chat. We always appreciate you guys making this a two-way conversation and love answering your questions. So the first one here, I'll start off with from Marley. Would you buy a triplex or a multiplex this year? And I might use this just to kind of bring up a broader question. Are you guys currently actively looking to acquire properties yourselves? And if so, why? And if not, why as well? So who's on the hunt for real estate? Abdallah?
I can always jump in here. Yeah, we're like our buying group and our personal portfolio. We haven't taken the foot off the gas. It's been not to say that we haven't pivoted, to make it more feasible. Like I mentioned earlier, it's head first into the commercial space. So that's all we're focused on right now. But in terms of acquisition, there's a lot of creative solutions out there, especially with like larger commercial res buildings and better take backs and kind of creative agreements there. But if you're looking to get into the multi-unit space, if the down payment allows for it to get into the 5+ range, I'd highly recommend it. So, but me personally, I preach and I do. So we haven't stopped acquiring just yet.
Got it. And do you set like yearly goals for yourself, Abdallah, in regards to like units or properties acquired or anything like that?
It's more of a money drainage goal. It's just basically how fast can I get my account to 000, and then that work from there. But no, in all seriousness, no, we don't really. It's just kind of assessing every 3 or 4 months where the next kind of rush of capital's coming in from refis or another lend, wherever the case is. But yeah, the last 8 months there's been some heavy duty acquisitions with a couple buildings and our Florida builds happening. But I'd say a building a year for sure, with maybe a couple capital kind of flips on the side. If we can do 2 or 3 a year and acquire a nice building we can reposition, that's the goal every year going forward.
Got it. Hussein, are you or your family currently in the market for real estate? And if so, why? Or if not, why?
So we are in the market, but we're looking more south of the border, looking for commercial opportunities down south, and also just getting involved more and more in the self-storage game, especially for industrial suppliers and warehousing. So not really
Interesting.
residential, but more for those, because we're trying to be more in the cash space where we're willing to buy contaminated land, because essentially it's a smaller market, less competition, and the margins are actually higher for people who are actually willing to take that risk and sit on, because a lot of people need storage for those places, especially like manufacturers and things like that. And it comes at a premium. So if you can get a good strategic location near a railway or a port, it can be quite a interesting play, especially in the United States.
Interesting. Yeah, that's a really unique angle there. Not to be too crude, but it seems like there's probably a lot of opportunities right now in the Ohio Basin in regards to that. But that's a really unique niche that I haven't heard of anyone really specializing in. So yeah, I appreciate you kind of sharing that. What originally brought you guys into that strategy? Was it just an opportunity? Was there one deal that really sparked your interest?
It was a connection with a contact at Bank of America who brought us into that and said, "This is an interesting opportunity. These are the cap rates you can generate. Think about it."
And what would your typical hold period look like on that? Like, you guys are thinking in like decades?
Absolutely.
Yeah.
If you're looking for a short term, you're not going to get a lot of appreciation. The wealth is to be created in basically the land, and then hoping that eventually the property might be needed by a governmental entity for some reason, and then they just take it over where they don't really care.
Got it. Kenny, are you currently in the market for real estate?
So we're always in the market for real estate. One of the bigger goals for this year is to optimize our existing portfolio. So there is a lot of opportunity where we are able to increase in net income from our property. So I mean, there are some tenants that that we are working with to get them out, or renovating certain units. We actually had a couple of older tenants. They had been at one of the properties for one was there for 10 years, one was there for 30 years. Luckily, they both decided to leave, and now we're able to renovate those units and get them to almost twice as much rent that they were previously rented at. So definitely strengthening what we already have, but at the same time, our bread and butter has been triplexes and fourplexes, so we kind of just worked on the residential side of the real estate, but at the same time they were multifamily. The goal for this year is to start getting into more commercial, and we have we're raising capital from other investors, and then just try to buy some commercial residential units this year.
Got it. Awesome.
Yeah.
We'll love the fact that everyone's in the market for real estate. And I think for anyone that's maybe new to the idea of real estate investing watching this, it's important to understand that I would say most investors are always, at least in theory, in the market for a good deal. It just really comes down to their criteria may evolve over time, right? So you may be very aggressively acquiring deals at one point in time, and others you may be just waiting for it to fall into your lap. But Kenny, anything you want to add to that?
No, just I mean, for a few of our investor clients or people that I've met in networking events or other events, sometimes they just lack the know-how of how them having the money, or them reaching a certain point in their investing career where they think they cannot acquire any more properties. There are definitely options out there. There are commercial real estate options where you're not personally debt, you're not qualifying yourself based on your personal debt servicing, where you're actually qualifying the asset itself, the building itself, which a lot of investors may not know about. So definitely, I mean, deals are always there, and ways to finance the deals are always there as well.
Yeah, great advice there. I see we've got another question here from David. If you had to pick a province outside of your home province, which province would you pick to be a residential landlord in? And I think this is a great question. Obviously, we're all based out of Ontario here. I'll maybe answer first and then open it up to anyone else that wants to share their thoughts here. But for me personally, I'd be naturally attracted to markets with less regulation. So I think real quickly, that means Ontario would be off the list. Quebec would be off the list, and BC would be off the list. Me in particular, I'd probably be drawn out west personally, but again, accepting that real estate's all about like your local real estate market, right? So understand that you need to become an expert wherever you decide to invest in. So whether you pick Alberta, Saskatchewan, Manitoba, or anywhere else in Canada, you really want to hone in and understand that market well. So I wouldn't just jump in solely to a market just because it had little or lesser regulation than the markets I'm currently an investor in. But that certainly would be one of the primary considerations I'd have. But I think there's opportunities in any and all provinces here in Canada in regards to real estate. But what's everyone else's thoughts? Do you believe that there's a certain market here in Canada you're particularly drawn to? Hussein? Yeah.
So echoing on to the last part of what you said, I actually think it's really important to not answer that by province, but actually what are your goals? Because I think it's very important to be clear on what you're trying to accomplish, and also what your budget is. You might have a limited budget where you might not be able to get a duplex in Ontario, but you might get one in New Brunswick. So you can run your numbers and see how it works out there. So it's really important for investors not just to go with the flow, but actually think, what is my goals? What are my objectives? And base it on that, and then forming the network and taking the time to get out there, meet with the professionals doing it out there who can guide them and actually advise them in an authentic, accurate way.
Yeah, that's perfect advice there. Anything you guys want to add, Kenny or Abdallah?
I mean, we've seen a lot of, again, what Hussein said makes complete sense. It depends on your goals. From an investor activity standpoint, we are seeing a lot of money flowing into Alberta, but the primary reason that it's a very landlord friendly province. But again, it really depends on your goals, depends on, where you see that portfolio be in 5 years, 10 years, 20 years. Markets like Ontario have, a a rapid growth, or just they're more attractive markets for the population to reside in, versus Alberta, which is dependent on one or two economic industries. But depends on your goals. You need something more cash flow friendly versus appreciation friendly. It really depends on where you want to be.
Mm-hmm.
Yeah. Thanks, Matt. Yeah, great points by Kenny and Hussein, especially with talking about the goals. To be honest, I've been a sucker for Hamilton and Ontario for way too long. But just kind of obviously with the network that we've established here, and hearing what other people are doing, the conversation I have with other industry professionals, sounds like Alberta's the win. I know we've mentioned it a couple times here going around, but I was with some commercial clients today and echoing the same thing. They have a new build closing out there, so we're shooting the breeze about Alberta and how it's far more landlord friendly, and everybody knows, right? Ontario, tenant is king, right? So to be able to deal with those evictions and those problematic situations with a little less headache, but then obviously appreciation caps, right there. It's your trade-off, right? As the other gentlemen have echoed here. So, but yeah, for somebody that hasn't physically gone to other parts of Canada, I'm looking forward to seeing what Alberta's got to offer here on the commercial res side for sure.
Awesome. Yeah, appreciate all the insights. And yeah, absolutely. It really does come down to setting your goals and understanding your why as a real estate investor. That's the best framework. I do seem to notice a pattern, though, amongst most landlords, and that is usually on a long enough time horizon, they tend towards low time investments or low hassle investments. Oftentimes I find landlords are very hands-on at the beginning, and with time, they're either going to want to build up a team or outsource a lot of the day-to-day management. And I think that that's why a lot of investors that decide to still be hands-on with their portfolios often eventually decide to get into commercial or things like self-storage or even some of the other investment strategies you were mentioning, Hussein. So again, there's a strategy for just about any type of real estate investor. It's really just a matter of understanding what you're trying to accomplish. And if you guys want, you can go to mattmckeever.com, and there's free e-guides there or ebooks on the website. One of them is called Discover Your Why. So if you're struggling to figure out what's the best investment strategy, why should you get into real estate versus stocks? And again, maybe that's not even the right choice for you, but it really does come down to understanding like what is the goal with real estate investing. For a lot of people, it often starts with they want, to have more money. But we need to really drill down and define that, because for one person, it could be a lump sum. For another, it could be a monthly payment, right? Or cash flow they're looking to build up or replace, say, their employment income. So anyways, appreciate everyone watching this live stream tonight. If you guys enjoyed this video, smash the like button. If you've got any last minute questions, jump in the chat there. But again, we always appreciate you guys making this a two-way conversation. And before we wrap up, I want to make sure that you guys know how to get in contact with all our panelists, because we really do appreciate you guys joining us and sharing your thoughts, your insights to what's going on here in the Canadian real estate market. So Hussein, if people want to get in contact with you, if they want to reach out, what's the best way to do so?
Two ways. They can either contact me on Instagram at HSK Law Firm, or they can email me, and they can get my email from the website, which is hsklawfirm.ca.
Awesome. Well, thanks again for joining us. And yeah, I look forward to maybe down the road hearing more about some of your investment strategies. That stuff is definitely interesting.
Awesome. Sounds great.
All right, Kenny, if people want to get in contact.
Right, for sure. So I'm primarily on Instagram. We go by Northridge Real Estate on Instagram. So definitely find me there. And then you can always reach me at my email. It's kenny@thefinlandmortgageteam.ca. If you have any mortgage-related questions, always here to help. Even if it's you're not getting a mortgage through us, we're here to help you out.
Awesome. And Abdallah, if people want to get in contact with you.
Yep. Of course. Yeah. Thanks, Matt, Kenny, Hussein. Nice to meet everybody. A lot of fun here tonight. So Instagram, Facebook at the Madge Realty Group. The brokerage is Rebel Hamilton Central, madgedrealty.com as well on the website, or Abdallah at madgedrealty.com.
Awesome. Well, thanks again, guys. Appreciate you joining us. And reminder for everyone watching this, we do this every single Wednesday, 8 p.m. Eastern Standard Time, same place. I'll see you guys next week. And again, hope you guys are doing well in this market. And I think the key is just always to focus on what's right for you in your personal situation.